Matt from the Trade Brigade here doing a technical analysis on ticker symbol BABA for Alibaba Group. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be a bit of an update. We talked about it just the other day, and the main thing to discuss is sort of the failed breakout of this bullish pennant pattern right here. Currently, we have a daily upper wick, which definitely took out the high, but did not close above that level right there. It actually closed back down underneath that trigger point here, closer to 122.50. As a matter of fact, now I would start to look at the situation like this. To be quite honest, we have a number of buyers who probably got involved either in this consolidation or as the breakout started to unfold, and those buyers are going to be very disappointed when and if we take out these two-day lows close to 115.85. If that were to happen, I would expect a flush to take us closer to that 110 daily area of support, which we have mapped out from here, as well as off in the past, off the screen right now, and this most recent low here as well. That's the downside case. If it does want to perk back up, this time it's got to be a firm daily candle close up and over 124.13, coming from the true high of the prior bull pennant, something that looked like that. From there, we can walk up the target to that all-important level around 130. From the 30-minute intraday time frame perspective, what else are we seeing with this price action? Again, all in one bar, we essentially made that big push higher. We did start to get healthy bull flag consolidation. I will give credit where credit is due, but ultimately into the end of the day, the pullback ultimately, I said ultimately a couple times there, but you get the gist. It pulled back a little bit deeper than what we would have liked to see. We'll take out the Fibonacci's from the low of today's session to the high, and what you'll notice is that although we didn't break the 61.8, we're currently sitting right on it. In the post market, we're a little bit lower, 121 even by 121.20. So I guess, if you want to split the difference between the spread, I guess we're kind of right at that level. Use that as a pivot. If we're above that level, then fine. Look for the breakout back up and over once again. This area here, the more conservative trader probably just waits for the break of these highs closer to 126. Or if we open underneath that pivot we just discussed, the 61.8 Fibonacci, then that's where you watch out for the instance to come into the two-day lows here and here at 115.85, and a break of that level disappoints any longs who are accumulating in here, and we should flush into that 110 level. That's going to wrap up the video. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.